Everybody, welcome to another geopolitical analysis video. It's been a while. I thought I'd check in with you and make a prognosis here and take a look at what has been going on in the markets, but also overall with the situation. Now, we know for a fact that Trump is a disruptor. We know for a fact that Trump is that shit disturber that is changing the status quo in some regard. Now, when it comes to the Federal Reserve, of course, it's a show, it's a theater, because he has to strongman the most powerful position in the world, which is the chairman of the Federal Reserve. In this situation, though, I think it's very important to analyze theater versus reality. So let's dive in. Okay, so first things first, rates are coming down. We've been seeing a lot of volatility in the markets. We've been seeing a lot of volatility in the treasuries. And like I told you, treasuries are a great way right now to trade. So whenever rates go up, I think it's a great idea to buy more treasuries options. That's what I've been doing, because this volatility here has providing with 20-30% if you're playing options. That's one. We made a good call about the rates dropping, and so far we're stuck in this range, and I do anticipate things to drop May, June forward. We have held in one of the most pernicious times during quantitative tightening. The only thing waiting for the last push in the market is quantitative easing, which will take place shortly. I believe we are in the precipice of something great in terms of printing, and unfortunately further currency devaluation, and that is why we have to be in things that will profit, like treasuries, the cryptos, the gold, the silver, and potentially some commodities that we still need to see them drop. I talked about oil, and I told you a great indicator of the economy is looking at the price of oil. Now, the fact that it pierced 60, right, and we saw a bit of a bounce, shows you all you need to know about consumer spending and also trade. Trade right now is being disrupted with the tariffs, and that is the purpose, in order to bring in more negotiations onto the table, bringing all the parties, which we notice has been taking place. This is a disruption of globalization as we know it. China, being the producer, having the powerful output it once had, is coming towards its hiatus. It's coming towards that zenith. And what goes up must come down, as above, so below. And in this situation, we have to be prepared, because countries that are not destined to be autonomous, to be sovereign, will face a backlash from its people, but also from further deficits when it comes to trade. Trump is fighting deficits, guys. He's fighting the trade deficits. Whether or not he succeeds is beyond me. I cannot predict that, but in order to be prepared for this, we have to be involved in things that will increase in value due to the further currency devaluation. Trump has signaled what he wants to do with the markets. This was just a correction. A lot of you may be disappointed with some of the movements, but if we look at the correlation of Bitcoin and the correlation of gold, it's telling us something. It's telling us that a lot of capital is going towards precious metals and also Bitcoin. I believe that for the near term, gold may have topped. I think that 3,500 an ounce is a lot of money for gold, and I do think that it could go much higher in the future. But right now, I do think that gold has reached a temporary top. A lot of people disagree. A lot of people think we're going higher. But again, if we look at the market cap of gold versus the market cap of Bitcoin, it's telling us something. It's telling us that a lot more money can go into Bitcoin. Bitcoin can further increase in value versus gold. That's my opinion. Now, it's good, of course, to hold physical, but that's up to you guys. One thing I want to look at is the commodities sector. If we look at the commodities sector here, this resembles one of the strongest commodities, which is oil as well. It's one of the biggest ETFs that contains a diversified portfolio when it comes to commodities. I do think that commodities is a good play to start inching in. Of course, the economy still hasn't hit a recession in terms of its final blow, in terms of the fullest effect that a recession can have. But I do think that once we start observing the money supply has been creeping up into the levels that it once was before it actually dropped. And this is significant because this is indicating that more money is coming in. And if you look at this move, this aggressive move up, I do think that from 20.7 trillion to 21.7 trillion, we got 1 trillion being entered into commercial banking from November 23rd, which was one of the bottoms of quantitative tightening. So quantitative easing is upon us. It's happening slowly. And I do think that this will, of course, inflate further Bitcoin, crypto, stocks, etc. I do think that this correction is great in order to get in. The markets doesn't give us always opportunities. It's when you buy in corrections, dips, that's when you enter, and you sell at the top or near the top. Okay. Now, looking at Pfizer, for instance, you have companies like Pfizer that, in many ways, it has been indicating that the Dow and all the bigger American companies potentially have bottomed in this trend, in this downtrend, and this would be a great opportunity, such as these companies, to get into them and have a bite into what will come. Looking at the Bitcoin miners have been behaving in a very interesting way. Like we said before, Bitcoin miners front run the move, and now they're just consolidating. So I was a buyer at all these levels here, and even at the very bottom here, and I do think that this is just the beginning. So in this situation, I think that we need to take a look at this opportunity and look at the previous levels of the highs when Bitcoin topped, and look at it with some optimism. I believe that if we do a correlation between the miners and Bitcoin, they've been behaving pretty stable in terms of the recent last few days, and I do think that once we consolidate here, drop a little bit perhaps, then there's further upside to go. We're not done yet, guys. Quantitative tightening is done. Quantitative easing right now is starting, and this is when you want to be in the markets. You don't want to sell during quantitative tightening. You want to sell just before the ending of quantitative easing, and QE will happen. Currency devaluation is never going to stop. Nothing stops this train, like Lynn Alden always says, and I think that we need to be prepared. It's going to be volatile, but it's going to be a great opportunity to get back in whenever we have significant drawdowns. I'm very optimistic. I'm bullish, and if we look at the dollar, we've been saying for months now that the dollar is going to drop, and a lower dollar improves the price of many assets across the board. And right now, I do think that the dollar has started its leg down, and after this bounce, we might see a bit of a higher bounce to 102 again, and I think that we're down to low 90s, 89, and that's when it's going to be a great opportunity to sell and get back into US dollars, in my opinion, because I do think at some point rates will increase. but I think temporarily we've seen a top. Now, I want to talk a little bit about the disruption. I do think that Trump, to some degree, uh, had to be as aggressive in order to shake up what was taking place. The globalists are against those who want a much more sovereign nation and want to preserve the wealth of certain countries and keep that autonomy. And I think that in order to sometimes take the medicine, you have to look at the short term pain for the short term gain. That's all I have for you guys. I hope you enjoy the rest of your week and we'll carry on further. Thank you. Bye for now.